And there it is, 4 p.m. here on the East Coast, straight up the closing bell at the New York Stock Exchange, ending another trading day on Wall Street. Let's see where the numbers are settling at this moment. The Dow down 200 points, almost like erasing the gains we saw yesterday.
Yeah, the S&P and NASDAQ were both relatively flat for the day. Kristin Myers joins us now. She is editor-in-chief at The Balance. All right, Kristin, so we saw the number there. What was driving the markets today?
Yeah, so we originally saw a lot of optimism in the markets, actually starting yesterday after Fed Chair Jerome Powell actually came out and said, listen, we actually are going to start moderating the pace of those rate hikes, which is usually something that investors have been really, really concerned about. And then today, this was a really big economic day today, at least when it comes to the markets and with investors. And we actually saw that inflation cooled a little bit, actually more than economists were originally expecting. And what came out today, because we hear a lot of inflation numbers, right? Today was the PCE. It's actually the Fed's preferred inflation gauge. So that's the number that they're going to be looking at when it determines the future of those rate hikes. So the fact that we see inflation coming down a little bit more gave investors, and honestly for all of us, a little bit more optimism.
And there's also this lag time, isn't there, between policy, like a Fed rate hike, and when it actually shows up in the economy. Talk to us about the November jobs report. That comes out tomorrow. Today we're seeing headlines about layoffs in the media sector, places like CNN, Barnett, which owns USA Today, they're laying off people. We've seen it in the tech sector, places like Twitter. What do you think about those numbers, and what to expect tomorrow, and what that means?
Yeah, so when we hear about layoffs, I think most people start to freak out, and they start to panic because they think, what if I'm next? My job could be next. But the reality is the labor market is still incredibly strong. I mean, we got jobless claims out today. They're about a week behind. So we saw the number of people filing for unemployment for the first time actually drop last week. So the labor market is still going strong. And at least when it comes tomorrow to the unemployment numbers, right now we're seeing a 3.7% unemployment rate. That's expected to remain unchanged, which is incredibly low. So if we're heading into a recession, this would be the only recession where most of Americans are still employed. But at least when it comes to layoffs, the Fed actually wants to see that. You have to think about the economy as a pot of boiling water, right? It's been overheating for a really long time. That's why inflation has been so high. It's been bubbling over. The Fed right now is literally turning down the gas, turning down the flame on that pot. And that means that unemployment should go up as a part of cooling that economy down.
So let's dig into this just a little bit. So yesterday, Fed Reserve Chair Jerome Powell signaled that the Fed could soon begin to ease the pace of interest rate hikes. How do you think the Fed will react if that jobs report comes in below expectations?
So this is what we like to call good news as bad news, right? Okay. So the Fed has really been looking to the labor market as almost a proxy as the strength of the U.S. economy. If more people are employed, right, more people have an income, they're going out and they continue to spend. And since 70% of the U.S. economy is actually based on consumer spending, that's why they're looking at the strength of the labor market. So if the numbers come in tomorrow and they're very, very good, let's say unemployment stays at 3.7%, drops perhaps even, right? The Fed is going to say, okay, well, our rate hikes are not necessarily taking their exact effect that we want. We want inflation to come down, but we want to start to see a little bit more people getting unemployed, which sounds like a terrible thing. That's when good news becomes bad news, because then investors say, the economy is too strong. The Fed might say the economy is strong enough to handle even more rate hikes. So that's when you might see those markets respond a little bit negatively. If unemployment ticks upwards, that's when sometimes bad news becomes good news, because then investors say, okay, great, the Fed doesn't want to hit us with any more rate hikes. Maybe they won't give us too many rate hikes, or at least not as aggressive a rate hike going forward.
There's just so many ripple effects, though, because you think about like mortgage rates, you think about people trying to get into that first home, right? All of this has an effect. It's such a complex picture. So
and it's a reason why some of these media layoffs are taking place, is because there's fewer advertising dollars being pumped into them, so they've got to cut back.
It's all interconnected. Absolutely. Absolutely.
But you've explained it very well. Good news is bad news is good news, and the pot of water is boiling over, ladies and gentlemen. Kristin Myers, great to have you here. Thank you so much.
Thanks.